Welcome back. Asian markets have been, largely in green territory so far, and the expectation is that we'll probably start in the, in the positive side. Lots of stocks to go over as well. There you go. There's the picture across Asia. The Chinese and the Hong Kong markets are actually the best performing. And the implied open is suggesting that we'll start probably 18 to 20 points higher. So what about individual stocks? A ton of earnings to go over, all coming after market hours. So let's straight away get to it. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, happy Monday to all of you. Let's start, with some of the positive results. And I guess Kotak Mahindra Bank could be topping that list. Abhishek.
Well, Kotak Mahindra Bank, reported a better than analyst estimate on various parameters. So take a look at the net interest margin. It actually expanded sequentially by 2 basis points, while analysts were expecting it to decline by 5 to 7 basis points on a sequential basis. The slippages have also improved on a sequential basis. It's come down by 11.5% in absolute value. However, analysts were expecting slippages to increase by 200 to 300 crore on a quarter-on-quarter basis. Asset quality, the gross NPA is largely flat at 1.5% versus Motilal Oswal estimate of 1.56%. Their business momentum has been pretty better than what analysts estimated. So deposit growth was nearly 16% YOY, while Motilal Oswal estimated at 15%, and their advances growth was at 15% YOY, while Motilal Oswal had an estimate of 14% YOY. So strong core operating profit, that is operating profit ex of treasury, about 11.5% YOY and 4% sequentially. What's not worked in the results is the two key subsidiaries who have seen their PAT decline both YOY and quarter-on-quarter, that is Kotak Mahindra Prime as well as Kotak Mahindra Investment. With reference to the P&L, both the NI and PAT is a beat on our poll. Back to you.
Okay, all right, Abhishek. Thanks a lot for that. So a positive outcome for Kotak Mahindra Bank. But Reema joining to tell us about the tech majors, Tech Mahindra and Wipro. Reema, how were they?
Well, let's start with Wipro. One, the quarter was good. It was a beat on revenues and margins. The second positive was the company has revised the capital allocation policy higher. They're now committing to paying out 70% of, the free cash flow. But that said, the Q4 guidance is very unexciting. So that's the summary of Wipro. Getting to the numbers, constant currency revenue growth for the company came in at 0.1%. EBIT margins in 17.5% is ahead of expectations, the highest in the last 3 years. And the company, and this is after the company absorbing a wage hike impact. So that is a positive. That said, the Q4 guidance is at -1% to +1%. So after a decent showing in Q3, the street would have liked to see some acceleration in Q4, but that is absent. Now coming to Tech Mahindra, again, the quarter is good. It's a beat on revenues, it's a beat on margins. But here analysts point out that while it's a positive step under the new management, we're seeing the right baby steps. If the company has to reach its goal that by FY27, the company starts beating industry growth rates or even matches up to it and expands their margins, it's still a very tall ask. That said, just going by the Q3 numbers, it's a beat. Revenue growth at 1.2%. Margin expansion is positive. It's come in at 10.2%, and it's been rising for the last couple of quarters. The company in the conference call says that calendar year 25 should be better than calendar year 24. But as I said, it's a step in the right direction. It's a good quarter, but a lot more needs to be done to match up to the industry by FY27.
Okay, well, Reema, thank you very much for that. We'll come back to you for more. But at 8:35, we heard from the management, the CEO, CFO and CHRO at Wipro talk to us about their business going forward. Well, let's talk about hotels now. Indian Hotels, the #1 hotel company in the country, reported numbers. Mangalam is here with a quick snapshot view. Mangalam, morning.
Good morning. So the third quarter is seasonally the strongest quarter for the hospitality industry, and if the leader had to report numbers, it had to be better than the industry. That's exactly what has happened. 11 consecutive quarters of record performance coming in for Indian Hotels. Growth has been supported further by the consolidation of SATS and the other new businesses itself. So if you just look at the reported numbers, the revenue for the company on a consolidated basis in the third quarter grew by 29%. And typically the EBITDA grows higher than revenue when things are doing well. The operating leverage kicks in. Margins at 38%, EBITDA growing 31%, and the net profit growing by about 33%. Just giving you some internal details that tell you the quality of the numbers. There has been a 40% increase in new businesses, 13% growth in same-store hotels, and 20% growth in the US portfolio. Management fee, which is typically ROCE accretive, had about 32% growth out there. Average room rate increased by 11% and occupancy above 78% as well. The company signed 55 new hotels and they are on track for delivering double-digit growth in the fourth quarter, led by higher wedding dates and multiple events.
Okay, all right, got it. So looking good for Indian hotels. Thanks for that, Mangalam. By the way, at 10 o'clock, we will be chatting with the management. Mr. Puneet Chatwal is going to be in conversation with us. We'll talk about not just the third quarter, but of course, the outlook ahead for the company. That's Indian hotels. Let's get to a couple of financials now. Abhishek is back to take us through Canfin Homes and RBL Bank. Abhishek?
Well, RBL Bank was expected to be, weak with reference to the Q3 FY25 performance, but it's much weaker than what the analyst had pegged. So a PBT loss, that is profit before tax loss, for the first time in last 14 quarters is what you have seen in the P&L. 14-quarter high slippages, they are now at 1,309 crore versus 1,026 crore. 13-quarter high annualized slippage ratio of 5.8%. That's pretty high. Net interest margin is at 8-quarter low of 4.9% versus 5% in the previous quarter. Now, quarterly credit cost has been at 1.39% versus 0.8% in the previous quarter. Hence, the return ratios have got impacted. 14-quarter low with reference to the return ratios, ROA at just 0.09% and ROE at just 0.84%. So, for 22 quarters in a row, they have had an ROE of less than 10%. With reference to the P&L, both the NI and PAT is below our poll. Now, Canfin Homes, they are weak, but they were expected to be weak given the fact that registration office in Bangalore for real estate has been closed, and they are also facing issues in Hyderabad, which the management has been speaking about. So disbursements are down 0.02% YOY and about 21% quarter on quarter. AUM growth is at 9.1% YOY versus Motilal estimate of about 9% YOY. Net interest margin, they have declined by just 2 basis points sequentially, but it's interesting to note spreads have improved by 15 basis points on a sequential basis. Asset quality largely intact. Gross NPA ratio is at 0.92% versus 0.88% in the previous quarter. Back to you.
Thanks, Abhishek, for that. We'll also be connecting with the management of Canfin Homes Management at 9:40 a.m. We'll discuss the past quarter's numbers and their way ahead as well. The next one on our radar is ICICI Lombard, very volatile ahead of its numbers. Vamakshi, how are the results?
Well, it was a good set of numbers coming in from ICICI Lombard. Net earned premium saw an uptick of almost 17% year-on-year, coming in at 5,045 crores. They've incurred their incurred claims ratio stood at 65.8% as compared to 70% on a year-on-year basis. This is lower than what the street was expecting, so that bodes well. Underwriting losses also narrowed to 152 crores as compared to a loss of 283 crores. Resultantly, the combined ratio improved by almost 90 basis points to 102.7% as compared to 103.6% in the same quarter last year. Operating profit resultantly saw a very strong uptick of 65%, coming in at 685 crores, and the net profit too saw a very sharp surge of 68% on a year-on-year basis. So overall, a good set of numbers for ICICI Lombard.
All right, and again, you'll hear from the management of ICICI Lombard. Gopal Balachandran, CFO of the company, decode their performance for us. That's coming up at 9:50. L&T and GMR airports next in focus. Vivek is here with details. Vivek, morning.
Well, good morning. That's right. An important order win coming in as far as L&T is concerned. So, UAE Energy company known as Masdar has actually gone ahead and selected L&T as well as a Chinese company as preferred EPC partners. This is for a mega renewable energy project in Abu Dhabi. Both of these companies are EPC partners. This is for a solar PV as well as a battery storage giga-scale project. World's first large-scale, round-the-clock giga-scale project, and the per-day output of this particular project is going to be 1 gigawatt-hour. This particular news has actually come out on the website of the UAE Renewable Energy Company. L&T is yet to put out this particular development onto the exchanges. We reached out to the management of L&T. They, at this point of time, refused to comment. They are still awaiting certain details before they can go ahead and give it to the exchanges. The other stock on the radar is GMR Airport. The December business update is something that has come about. December passenger traffic is up almost 9% on a year-on-year basis, up 6% on a month-on-month basis. The aircraft movement is up 7% on a year-on-year basis and 5% on a month-on-month basis. Along with that, the company has also gone ahead and declared that there's a creation of encumbrance towards pledge for a particular facility of the company. This is for close to 17.8% of the total shares of one of the promoter enterprises known as GMR Infra Enterprises. So both of these stocks in focus today on the back of news flow.
Okay, all right. We'll keep them on our radar. Vivek, thank you very much for that. Let's move on. Vamakshi is looking out for some news, in connection with Hitachi Energy. Some fundraising about to happen, Vamakshi?
Well, absolutely right, Sudbi. Going with the green for Hitachi Energy on the back of this news flow itself, the company has said that the board has gone ahead and approved its fundraising plans via equity shares, QIP. They will be considering several modes. In fact, they will be raising up to 4,200 crores in one or more tranches. Now, keep in mind that back in October, the company had said that they will be investing nearly 2,000 crores worth in India itself in order to mark, 75 years of business in India. So a part of it could be used probably to fund this sort of capex. But apart from that, it'll be important to monitor when this fundraise actually comes through and the utilization of the proceeds. So overall, it's a green for Hitachi Energy.
All right, got that. Thanks very much, Mamakshi, for that. Let's quickly recap our list of top stocks to watch this Monday morning, the ones that have positive news flow around them. Kotak Mahindra Bank, Tech Mahindra, Wipro, Indian Hotels, Canfin Homes, ICICI Lombard, L&T, GMR Airports, and Hitachi Energy. RBL Bank is actually the only stock on our list this morning that could actually open in the red on the back of really weak numbers. That's the equity list. Let's now go across to Manisha Gupta to find out how the commodity markets are doing and perhaps how they are gearing up to welcome in the new US president. Manisha, morning. What are the headlines?
Morning, and thank you for that. So we will absolutely, ahead of that Trump inauguration, we're looking at dollar index easing a bit. And even with that, there's no support really to commodities. So after last 3 and 4 weeks of constant gains, crude oil prices put 4 weeks of gains. But we've started on a flat note today, slightly on the higher side as the markets will try to understand the sanctions impact on Russian oil tankers and oil companies. So that is something that the street is worried about. But apart from that, China also keeping its prime lending rate unchanged is what the metals are digesting right now. And remember, markets are focusing on Trump's plan to raise tariffs, tighten immigration, lower taxes, ramp up deregulation, and there's various other things. So the markets were in any case subdued, but add to that the fact that the U.S. markets are closed for the Martin Luther King Jr. holiday as well. So that also adds an impact in sense of a lot of people keeping away from the markets. In Asia right now, we are looking at lower volumes and very steady moves. The decline actually has continued in case of metal prices. So copper is down by a percentage point. Zinc, aluminum also opening 0.25% to 0.5% on the weaker side ahead of Trump inauguration.
Okay, all right. Thanks a lot for that, Manisha, for giving us that neat wrap. Well, let's